Ever get frustrated trying to qualify for a mortgage because you're self-employed and your taxes don't tell the full story, or the bank keeps asking for more and more paperwork? What if I told you there's a type of loan that looks at your bank statements instead of your traditional income? It's called a bank statement loan, and it might be the perfect golden ticket for you. By the way, I'm Mauricio. I help people get into real estate the smart way, and before we dive deeper, if you're into buying homes, building wealth, or just want smart ways to make your money work for you, go ahead and hit that subscribe button. It really helps me keep bringing you these tips. A bank statement loan is basically a mortgage for self-employed people or anyone whose income isn't easy to verify with W-2s or traditional pay stubs. Instead of asking for tax returns or a 9-to-5 paycheck, the lender looks at your bank deposits over the last 12 to 24 months to see how much money is actually coming in. For example, if your business deposits $8,000 a month consistently, the lender can use that to qualify you for a mortgage, even if your tax returns didn't show the same numbers because of deductions. That's the beauty of this loan. Now, why are these loans becoming so popular? Here's a few reasons why. Self-employed friendly, so no more struggling to explain your deductions. It's a huge flexibility. You can use your personal or business bank statements depending on your situation. And it's a streamlined approval. Lenders focus on your cash rather than the complicated income paperwork. Basically, if you can prove money comes in regularly, this loan works in your favor. Not everyone needs this loan though. It's perfect if you're self-employed or your income is tricky to show on tax returns, if you have solid history of deposits over the last year or two, or if you want an easier approval process without getting buried in paperwork. If you're a W-2 employee with consistent income, a traditional loan might still be cheaper, but if you're self-employed, this could be a game changer for you. Now, how do lenders calculate income? So here's exactly how it works. Lenders typically look at your bank statements over the last 12 or 24 months. Then they calculate your average monthly deposits. They may exclude large one deposits or transfers that aren't income. If your bank statement shows an average of $10,000 a month of deposits, lenders will use that number, sometimes even averaging the last 12 months to qualify you for a mortgage. Simple math, but very powerful if your tax returns don't tell the whole story. Here are some of the big benefits of this type of loans. It's easier for self-employed or freelancers. There's less paperwork than traditional loans, and you can qualify for higher loan amounts if your deposits are very strong. Now, here are some things that you need to watch out for. The interest rates tend to be a little bit higher than conventional loans. Lenders usually want to see 12 to 24 months of bank statements. And it may not be ideal if your deposits are inconsistent or seasonal. So it's great for the right people, but it's not a one-size-fits-all solution. Recently, I had a client who ran a small digital marketing business. Their tax returns look low because of all the business deductions, but the bank statements show a solid $7,000 a month in deposit. We used those bank statements to qualify, and they got an approval for a mortgage within minutes. That would have been impossible through a traditional loan. Now they're moving into their first home, fully self-employed, without the stress of income verification. So that's the inside scoop on bank statement loans. If you're self-employed, a freelancer, or just want an easier way to qualify for a mortgage without drowning in paperwork, this could be your ticket. If you like this video and want more tips on creative ways to buy homes, build wealth, and make your money work smart for you, go ahead and hit that subscribe button. I've got tons more videos coming your way. And if you're curious whether a bank statement loan could work for you, reach out. I would love to help see your options.